Hi, I'm gonna be honest with you. As of lately, I've grown sick and tired of the never-ending bull and aggressive marketing that surrounds trading. Trust me when I say this, I've been seeing a shit ton of it recently. Today, I will try to destroy your hopes and dreams about getting rich quick trading from home. You know, the kind of ideas you might read or hear from the directors of making money by trading is easy. All you need is to try. And here's where we're gonna start. Once you go to any exchange website, you'll most likely see a number of people who signed up and how much some of those traders earned. And surely, this information pushes you to open a brokerage account yourself. You know, all those guys did it and now they're shoveling money. I'm not some kind of sucker, I'm gonna try it myself. Here's the thing. Would you still do it if you knew that 80% of those traders are at a loss? Yeah, right? But good luck trying to find any information on how those lucky traders perform. And trust me when I say that, any exchange, whether it's crypto exchange, stock exchange, binary options exchange, or whatever, they do have those figures. Each and every one of them does. But they'd be mad to publish it. And you know why? Because they would surely lose out on thousands of newbies and consequently on commissions of their trades. So, nah, they don't publish it. But dude, I saw like 10 guys on Instagram who literally swim in money they earn trading. And those guys, you know, they treat themselves to anything they want. What'd you say to that? Of course, my friend, there are such people. They inspire you and give you hope that you can do the same. Getting back to the question though, would you start trading if you knew the real figures? And you'd probably say yes, right? Because you've seen what success looks like. You've seen all those beautiful Instagram photos, you'd be restless and surely you'd think that you belong to those 20% who do earn fortunes. But let's take a quick break from Instagram photos and dive into real, dry facts based on research. For instance, last year, Markets Insider published an article with a very encouraging title. If you're day trading, you will probably lose money. Here's why. This article does a great job exposing the figures that exchanges really don't like to share. And a couple of years ago, Social Science Research Network conducted a study in Brazil. 300 days they gathered data from different traders, and it turned out that 97% of them traded futures at a loss. 1.9% kept trading having earned nothing, and a mere 1.1% turned profits. Taiwanese exchanges also recorded trading statistics. They did it from 1995 to 2006, and it turned out that only 5% of traders can reliably turn a profit. In 2011, the US Securities and Exchange Commission released a study that revealed that each quarter, 70% of traders trade at a loss. At higher risk were the traders who had less than 12 months of experience. They were likely to lose all their assets. So you see, even if you take those trading courses that take several weeks, you would still need to trade for a whole year and hope that you don't lose everything you have. Israeli broker Ero's findings, published 3 years ago, suggest that 76% of traders who use SFDs lose money more than they earn. Every inexperienced trader can easily find those figures in Google and then hopefully realize he's much more likely to quit trading with all in his account than actually earn anything. But still, the vast majority of them don't give a shit about figures and statistics. They've seen success on Instagram, other people's Instagrams. Yeah, we heard some dick earns 30 grand a month sitting on his ass trading. Who doesn't want to be like Dick, huh? But next time you to a dick in a Lambo, keep in mind that the other 8 dicks don't post fancy photos. Hope you've lost your pink glasses by now. And now, let's try to talk about why 8 dicks out of 10 end up with I present Top 10 Trading Mistakes in 2022. Nah, just kidding, it's not gonna be a top 10 list. Still, let me go through some of the reasons why traders end up losing money. The order is arbitrary. It's not that any of them is more significant than the other, they're all important and complex. Starting off with taxes and commissions. Our early ancestors from the 20th century had to survive and bring food to the table using prehistoric trading terminals like TWS. The process took time, computers were slow, and YouTube wasn't a thing. And that meant that prehistoric traders almost never forgot about taxes and commissions. Their modern counterparts, on the other hand, quickly find themselves enchanted by green colors on their charts and led astray imagining how they the whole world. Now they are convinced that they must keep pushing the button while the luck is on their side. Sadly, with everything simplified, they tend to forget about fees and commissions, and often that plays a cruel joke on those who click the button too much, having forgotten that all those fees add up. So, when trading, keep in mind that every time you enter the market, you pay. Moving on to lack of discipline. Those who trade when they want to more often than not trade at a loss. This frivolous attitude does not allow them to create and follow a trading strategy. So, if you already made up your mind about becoming a trader, treat it as a job, not a hobby. Something that I already mentioned is not following a strategy. An unprepared trader risks competing with more experienced players and trading algorithms that investment funds use to get their penny. So, I wouldn't recommend anybody enter the market without a sound trading strategy. And if you don't have one, I have just the right video for you. Stress. Some people start trading when financially they're on the edge, while some trade with shoulders. Others, less fortunate ones, borrow $100 from a friend, expecting to make a quick buck, but in reality, they lose it all. Imagine how stressful it might be, and imagine how easy it would be to make a mistake. That is why you have to teach yourself to deal with stress and emotions. And God forbid you borrow money to trade. Whether it's a friend you're borrowing from or a bank, it doesn't matter. It's not about stress per se, it's dangerous as and unethical as hell. Learn to trade with your own money, with the amount you're not afraid to lose, and if you lose it, it will not hit you hard. And obviously, after you try your strategy out on a demo account. Also, regarding stress, I know there are some people who buy and sell stocks in a matter of seconds, the so-called scalpers. So, imagine a situation where one of them has to sell a position in 10 seconds and his lights go out, or his Wi-Fi goes down, or his wife asks him a question, it doesn't really matter. So, unless this guy is immune to stress, he's going to start seeing gray hair after a few months of trading like this. What it translates to is that your strategy must not only work in perfect conditions, but also fit your character, and if you decide to become a trader, you must try your best to avoid such situations. On Wall Street, they say that you can only trade if you understand how dangerous it is. This goes in stark contrast to people who start trading after reading a motivational book or attending a Tony Robbins seminar. So, my advice, don't do it. Watch the first part of the video where I say how unlikely it is for you to make consistent returns. If you still want to day trade, here's one more thing you need to know. You can't be master of one move. If you only know how to use one strategy and ignore everything else, you won't be able to adapt, to learn anything new, to try out new moves. And no, I'm not trying to discourage you, and I don't think you can't do it. No, I'm just pissed off at how aggressively trading is being forced on people on social media. With this video, I'm trying to explain that trading is not a hobby you can spend an hour every day on. It's meticulous work that will require you to constantly analyze the market, look for information, improve your skills, and be alert. Now, many of you ask me why I trade binary options. Are they even legal? Why don't you trade crypto or stocks with your expertise? From the beginning, at this point, there are tested and time-proven binary options brokers. They're completely legal and boast thousands of loyal users. The times when this kind of trading was a novelty is gone. You don't see shady exchanges opening and closing every day. That was in the early 2000s. So, why don't I trade stocks or crypto then? For the past 2 years, I traded crypto on Binance fairly actively. Since 2020, I also bought different stocks, but I stopped all that altogether. I was lucky enough to sell all my stocks before the war in Ukraine, as well as crypto, except for Bitcoin and Ethereum. Those I bought very cheap, so I don't want to sell them. But why have I quit crypto and stock trading and switched to full-time binary options trading? To put it simply, stock, crypto, and binary options trading are equal in terms of the proportion of those who win to those who lose. But at the same time, when trading crypto and stocks, you have to account for a whole lot of external factors. I know a lot of people who spent years building their investment portfolio to enjoy predictable returns, but it only took a moment for all those investments to lose 50% of their value, all because of geopolitics. For the same reason, well-known banks unilaterally increased their trading and withdrawal fees and commissions to sky-high levels, or they just froze accounts with stocks that haven't fallen in price yet. That's what stock trading really is. Nobody will tell you about this since it's accepted that stock trading is the most stable kind of trading. But this is all a lie, really. I've tried to show that in the beginning of this video. No matter what, even when the world is at peace, less than 20% turn a profit. As for crypto, I think it's become rather obvious for everyone that it's just an ultra-volatile kind of gambling where you can lose everything in one night. It only makes sense to buy Bitcoin and Ethereum, and only if you want to diversify your portfolio. Further, I wouldn't put more than 50% of your portfolio into crypto. Now that I know all this, now that I have felt it with my own skin, I don't see any point in trading anything but binary options. It's all about technical analysis and strategy with them. So, what do I mean by this? I mean that, sure, you can lose a large portion of your assets, but that happens if you fail at money or risk management, make a mistake analyzing the market, fall prey to emotions, or stop following the strategy. But you can always learn from your mistakes. In other words, you'll be to blame for your losses. When trading stocks, you might one day wake up to see that your assets lost 30% of their value in one night because some CEO got accused of sexual harassment. Or think about some token that went to zero in a matter of days when you were not following the news. To put it simply, I'd say that binary options trading is the simplified kind of trading, but that's not always a bad thing. It doesn't make sense to overcomplicate things, especially considering that whether it's stocks, crypto, or binary options trading, the 80-20% rule is still the same. Wrapping up, if after watching this video you still want to pursue day trading, I highly recommend you subscribe to this channel. Here, I'll do my best to make sure you're in the 20%.